Whatever the value given in the balance sheet is called book value. Whatever the value given in the adjustment is called market value. Total asset value 11 lakh, liability 4 lakh, difference of 7 lakh. Out of that preference share 80,000 gone, it is 6 lakh 20,000. There's a net asset. Average profit minus tax minus transfer to reserve minus preference dividend, whatever the amount available, that is a profit to equity shareholder. Hello, my dear student. I am Dr. B.S. Subramania, called by name Dr. BSS, Professor in Commerce and Management, Vidhyaashram First Aid College, a Temple of Excellence, MYSURU. In this session, I am going to hand Corporate Account, 3rd semester Unit 4, Session 4, in favor of valuation of share. Already I solved about the 3 problems, and now I am going to solve 1 or 2 problems on valuation of share. It's a definite problem from the examination point of view. I will go through very slowly, understand the problem, how you have to solve, which method you have to solve, how you have to bifurcate net asset made, how to bifurcate yield method. We'll go through the problem now. Balance sheet as on 31st December 2022. So they are given a balance sheet, cash at bank, building, machinery, furniture, stock, debtor, investment. Then 8% preference share of 10 each, 80,000, 12,000 equity share of 1,20,000, reserve 3 lakh, profit and loss upon 1 lakh, debenture is a liability, creditor is a liability, BP is a liability. Then adjustment. Building revalued 2,10,000, machinery 1,80,000, furnitures 1,10,000, bad debt 10,000 rupees. Remember? Tax 30%, transfer to reserve 20%, expected profit 10%. This is called NRR, normal rate of return. Profit for 3 years, 1,40,000, 2,60,000, 2 lakh rupees. Calculate net asset method, yield method, and the fair value. So under net asset method, total assets minus total liability. So total asset, it may be book value or the market. Whatever the value given in the balance sheet is called book value. Whatever the value given in the adjustment is called market value. If the market value is given, it may be more or like, or you can say more or less, you have to take the market value. Then total asset minus total liability is total capital employed minus preference share capital employed for equity shareholder. So market value B share is equal to net asset divided by total number of equity share. We'll move on to problem now. Net asset method. Particulars, rupees. You have to take book value or market value. We'll go one by one. What's the first one? Cash at bank. Same. Cash at bank. What's the value? 1 lakh. What is next one? Building revalue. Building revalued, how much money? 2,10,000. What is next one? This over. Machinery. What's the market value? 1,80,000. Revalue. What is the next one? This over. Furniture. Is it revalued? Furniture 1,10,000. furniture 1,10,000 revalued. So this over. Then stock, any chance? No. Stock, what's the book value? Furniture, stock 1,10,000. What's the next one? Debtors. What's the value? 2 lakh minus bad debt. What's your bad debt in here? Bad debt is 10,000. $1,90,000. Next, investment. No change. See that any change is there? No, no change is there. What's the investment value? 2 lakh. Add the figure. This is 1 lakh plus 10,000 1,90,000 2 lakh 11 lakh. One plus 8, 9, 10, 11, 20. 2 plus 1, 3, 5, 6, 7, 8, 9, 11. Minus total liabilities. This is your total asset minus total liability, which are the liabilities are debenture, what's the value? 2 lakh. What is the next one? Creditors. $90,000. What is the next one? BP. How much? 1,10,000. Add 1,10,000 plus 92 lakh plus 2 lakh, 4 lakh. Difference is 7 lakh. Total capital employed 7 lakh. My total capital employed 7 lakh minus preference share capital what's your preference share capital? 80,000. It becomes 6,20,000. This is your net assets. So your total asset valued 11 lakh, liability 4 lakh, difference of 7 lakh. Out of that preference share 80,000 gone, it is 6,20,000. That's a net asset. Next paragraph. Market value of each share is equal to, what's your net asset? 6,20,000 net asset divided by number of equity share divided by, what's number of equity share? 12,000. 12,000 shares. 12,000 shares. 6,20,000 divided by 51.66 per share value. This is as per asset backing method. We'll go to yield method. Second, this is your second. First step is add the 3 years profit divided by 3. Find out the average profit. What's the profit for the last 3 years? 1,40,000 plus 2,60,000 plus 2 lakh minus bad debt. How much is your bad debt is there? Bad debt is 10,000. 10,000. Bad debts. Add and subtract 1,40,000 plus 2,60,000 plus 2 lakh minus 10,000, 5,90,000. Average profit 5,90,000 divided by 3. 590 divided by 3. 1,96,667 average. Is it 666,196,666 average? Now, next step. Average profit $1,96,667 minus average profit minus tax. What's the percentage of tax here? 30%. So 1,96,667 into 30 divided by 100. 59,000 minus, this is 7, this is 6, this is 6. 1,37,667, 776 minus transfer to reserve. This is a format. Transfer to reserve. See that how much percentage? Transfer to reserve 20%. 20% on this. 1,37,667 into 20 divided by 100. 27,533. Deduct. This is 4. This is 3. This is 1. This is 0. This is 1. 1. 1,10,134 minus preference dividend. What's the percentage as per the balance sheet? 8% is the rate of dividend on 80,000. 80,000 into 8 by 100, 6,400. Deduct 110,134 minus 6,400 is equal to 103,734. Profit to equity as a procedure. Average profit minus tax minus transfer to reserve minus preference dividend, whatever the amount available, that is a profit to equity shareholder. Next step, capitalization. Profit available divided by normal rate of return. What is profit available? 103,734. What is normal rate of return? Expected profit? 10%. Divided by 10 into 100. So it is 10 lakh, 0 cancelled out, 0. 103,734 followed by 0. So 10 lakh 37,340. Capitalization of profit. Last one. Market value of each share. Capitalization profit. Capitalization divided by number of equity shares. Number of equity shares. What's the procedure? Capitalization of profit divided by number of equity shares. What's your capitalization of profit? 10 lakh 37,340. 10 lakh 37,340 divided by number of equity share, 12,000. 12,000 shares. Divide 10 lakh 37. 10 lakh 37,340 divided by is equal to 86.44 share value. Per share, as per profit method, it is 86.44. Fair value, add both. Answer of the net asset method. This is 86.44 plus, what's the value of share under net asset method? 51.67. 51.67 whole divided by 2. 86.44 plus 51.67 divided by 2. 69.05. Say ₹69 per share value. So both the method, add the both the method answer divided by 2, that is the fair value. This is as per yield method, this is net asset divided by 2. So total asset minus total lives capital employed minus preference share capital employed for equity shareholder divided by market value is share. Then under yield method, find out the average profit, total profit divided by number of years, average profit minus tax minus transfer to reserve minus preference dividend. Whatever the difference comes, there's a profit available. Then capitalize the profit. Profit available divided by NRR. Whatever the answer comes, divided by market value of each share, then you'll get the market value each share. Fair value, answer as per net asset method, answer as per the yield method, add both divided by 2. Very simple, no complication is there. So definite problem will come. If the preference share capital is given, you must be very careful. Total asset minus total asset, total capital employed minus preference share capital employed for equity shareholder divided by total number of equity share, yield method, average profit, total profit divided by 3 years or 4 years, then minus tag, minus transfer to reserve, minus preference dividend. There's a profit available to equity shareholder, capitalize the profit, profit available divided by NRR divided by total number of shares. Hope you understand. Very easy, definite problem from the examination of point of view. We'll meet in the next session with another problem. Till then, goodbye. Meet in the next class.